Hello, Jim here. Today I want to talk about the option wheel strategy and how you can make some really good extra income on a monthly basis. I compared three different size accounts and the impact of running the option wheel on them. I'm going to talk about their returns, what made it work or not work, and give you quite a bit of detail. So stay tuned. I think it's going to be well worth your while. Okay, now before I jump into the specifics for this video, I do want to give a quick market update. It's been an interesting week. The labor numbers that came out with several different government reports shows a bit of a weakening for the employment. It looked like new employment was a little bit lower than expected, and jobless claims and a couple of other measurements showed that potentially employment is slowing down. I do think this will probably continue. It does open up some room related to rate cuts for the Fed. Last week, we actually showed that inflation potentially was lower than what was expected. So I'm hoping that the Fed might actually cut rates sooner than we expect. Most people are still expecting probably September, October timeframe and two cuts. Maybe they'll surprise us and later this month, or maybe sometime during the summer they'll do a cut, maybe July or August. So at least I'm thinking that could possibly happen. I do think that the low back in April is probably the low for the year. We've been trending sideways and slightly up. I see that continuing. Doesn't mean we won't have some rough spots and some choppy markets during the week or the next couple of weeks. I think that will happen until the Congress passes the, as Trump likes to say it, the big beautiful bill. I wouldn't really call it big and beautiful. I'd rather see two or three bills versus one big beautiful bill. But once that gets ironed out, as well as the tariffs, I do think we may get some clarification with the tariffs, hopefully by the end of July. That's my hope. So, as always, that's my 2 cents, and it's probably only worth 2 cents. So next, let's actually jump into the main key points for the video. Now, what I'd like to really share with my memberships is finding good quality companies at fair prices. I typically will look at companies with good return on equity, maybe 20, 30 in that range or even higher is better. Low debt to equity or debt to market cap. I prefer companies to have no debt, but there's very few that have no debt. Also like to see good revenues, both growth-wise, also good earnings. If they pay a dividend, then I'll also like to see dividend growth with a low payout ratio so that they're not spending a ton of money on the dividends. Once you identify those things, those fundamentals, then I also like to look at the technicals. I'll look at the Bollinger Band. I use bar charts to look at the Bollinger Band. I have it paired with RSI so I can see if potentially they're an oversold stock. And pairing the fundamentals with the bar chart, Bollinger Band, and RSI has worked out quite well. So I'm able to identify a company that not just is a great company, but isn't necessarily overpriced. There are a lot of really good companies that are way overpriced, like Palantir, APP, which is that AppLovin company. It shot through the roof. I originally traded in it earlier last year, and I believe it was in the 40s or 50s, and it's like 300 or 400 now. So that's kind of the most important part of trading or investing. If you identify the right companies and make good trades on them, you're going to do really well. You've won half the battle. Next, I like to, for my positions, right size those positions. So if it's a small account, I typically encourage people to do one contract. When I started trading, I started with one contract, then I went to two. If it's a small, inexpensive stock, like a 10 or 15, $20 stock, I might go with 3 or 4 contracts. But if you're starting out, take it slow. Start with one contract. If that works out well, then down the road you could do 2, 3, 4. I do encourage people not to do too many. Of course, the larger your account, the more contracts you can do. If you really like a company and you do want to do more contracts, then do it as 2 different trades. Have one that's expiring next month and maybe another one that's expiring in 2 months. You don't want too many expirations on the same day, especially if we have a market correction, or you might end up having a lot of assignments. Next, I tested 3 wheel strategies. These are in what I call my option wheel strategy workbook. So I started with a $10,000 account, and I literally only do 2 trades in that account every month, and it ends up being $200 to $300, which is like 2 to 3% on a monthly basis. So just with 2 trades on a monthly basis, you can end up making 30-40% in, for the entire year. My next one, the 25K monthly, it's more like 4 or 5 trades, but it's in the same companies. A lot of times, instead of adding another company to the mix, I'll just do more contracts. Like I did that recently with SoFi. I went from 4 to 6 contracts. With it, I do primarily monthlies, so I won't do weeklies. I will do spreads. Again, when I tell people, if you sell a cash secured put, look to see what does it cost to buy that long put. If it's a more expensive stock, I'll go $10 out. If it's an inexpensive stock, I might start with $5 out, then try 4 or 3. Sometimes the $5 out spread, to give you a for instance, say you're looking at a $15 stock and you first look at the $10 spread. Well, if you go to the 9.8 or maybe even the $7 spread, meaning you're thinning that spread, you may find that you can pick up more premium, or the long put would be less expensive. And the same thing with calls. A lot of times we get deep in the water for calls. So if you sell a covered call, again, look out. If it's a more expensive stock, go out 10 for the spread. If it's a less expensive stock, then again, go out like $5. What that does is it protects you on the upside. So if you end up with a Palantir or a future Palantir or a future APP, if it shoots up 20, 30, 40, $50 or doubles, all you miss out on is the amount of that spread. So give you an example, if you started investing in a stock that was $25, you did a $30 call, and that stock goes up to 40, and you had purchased the 40 call, then those shares would be called back to you. So when it hit the covered call, they'd get called away potentially, especially if it crossed over expiration, or potentially, it could get early assigned. But then when it reaches that purchased call, they can get called back from you. And the only upside that you would miss would be related to that spread. So if it's a $5 spread, well, maybe you missed out on $500 minus whatever premium you brought in. So that's something that it takes a different way of thinking. I've started doing that more often. I've done it with AMD. And it's really important to do it on the initial setup of the trade. It's much more difficult to do that when you're having to roll, where you're already in the money or near the money, because that call or put becomes much more expensive. So try to do it on your initial setup. And then the 50K strategy, which I call my spread strategy, I do more spreads in that. And what's been surprising is some of those got into trouble in April. So I'll talk about that. I'll talk about what ended up happening and what you would expect. You would expect the bigger account could potentially do better, but it was actually the smaller accounts that did better. And again, primarily because I was taking more risk, which other months might have been fine, but the fact that we crossed April, some of the positions ended up taking a big hit. So again, I'll talk about that at the end of the video. Now, if you're curious about my memberships, I've had a lot of people joining. I currently have a lot of different members sharing their trades. Some of the members are doing better than I am. They're taking a bit more risk. One member doubled their account, or nearly doubled their account, during the correction time. So I encourage them to share their trades. I encourage other members to ask them questions. I do police it a little bit, so if something gets too risky, I do ask them to put those trades in a risky Discord channel, which it's literally risky trades. And there's a lot there. There's a lot of learning materials. There's a lot related to taxes, a lot related to running a business, meaning you could turn your trading into a business. For instance, I have an S Corp. If you already have an S Corp, you could potentially trade in an account that belongs to your S Corp or LLC, depending on what kind of structure you use. So I encourage you to take a look. Details will be in the description. I like to do it as low pressure. I allow people to share videos from other YouTubers. I also, we share ideas back and forth. Sometimes I take other people's trades. Every other week, we also have meetings related to the Trader Club. And I'm looking to add even more, some live events and some other things. So, again, take a look. It may be worth your while. Details in the description. Next, let's jump into the option wheel spreadsheet, where I'll primarily talk about my spread wheel trade strategy. I'll briefly talk about the other two just to show what it looked like when all three were combined. So stay tuned. I think it's going to be well worth your while. Okay, here's my spread wheel workbook. I have three tabs and also a favorites tab. The first one is my 10K wheel trades. I literally every month do two trades and make usually between 200 and 300. Some months I did as high as 400. I started with Hims and Fiverr, and Fiverr I've done the whole time. I've even done trades recently. So it works out pretty well. Long term, I end up making close to 5% on a monthly basis or 64% on a yearly basis. So again, you would think a bigger account you could make more, but just doing these two trades on two American Airlines, I don't necessarily want to own, but it does have fairly good numbers. It does have good cash flow. So if it does get assigned to me, I'll just keep wheeling it, let it get assigned away from me. But it does stay in a very small range and it works out quite well. Fiverr, I like Fiverr. I use Fiverr all the time. Um, and I would not mind owning it. It's recently recovered some, so um, it's I haven't traded it yet. It typically will move around, a couple dollars. So I'm waiting to be able to pick up around 140, 150 in premium. Once I can pick that up, I will probably go ahead and make the trade. The monthly wheel trades, again, I do 4 or 5 typically on a monthly basis. Some all different companies: Bluebird, Occidental Petroleum, FCX, HIMS. I've also done pins. This one does in a similar fashion. It does right around um, yearly almost 3%, so around 29, 30%. I have had some assignments, like I do currently own PayPal and FCX, Bluebird, and SoFi. I still don't own those. So a lot of the performance relates to owning the stocks. If you look at most of my returns in my own accounts, I typically do right around the S&P 500, sometimes better, sometimes worse. But what holds me back a little bit are certain stocks that might have been beaten up. Like recently, it's been UPS. I think it's down like $4,000 or $5,000 with the couple of hundred shares that I own with it. But here monthly, you can see 2.92. So a slightly bigger account, like a 25,000. It's a little bit more difficult to get that higher 30 to 60% return. Like I said before, some of my members are doing it, and of course I did it over in the 10K wheel, but I haven't been able to do quite as well with the monthly wheel trades. And I did a previous video on this in a little bit more detail, so I'm not going to jump into the specifics. The one I wanted to talk about today was my spread wheel trades. Now, I started this back in November. I used Lamb Research. I went overboard with too many chip makers. I had Qualcomm, Micron, Lamb Research. Um, Most of them expired. I made some pretty good income with them. You can see here I made almost 1,500 the first month. Similar situation. I rolled almost every position. I did add AMD to it and four. Again, some pretty good premium. I made a little bit less, about 773. Actually, that's the price that's come over here. I made 2,800, so I had a really good month. January, things started to go south a little bit. So again, some pretty good premium, not quite as high as the previous time, a little bit over 1,089. Still in Micron 4. I started trading Mara, M-A-R-A. They're a Bitcoin miner. They're kind of my foray into crypto and Bitcoin. Um, I learned more about them. They end up owning quite a bit of Bitcoin. So whatever they mine, they keep a certain amount. They have almost 5 or 6 billion or 4 or 5 billion in Bitcoin alone. So as Bitcoin goes up, they also go up. And it's interesting to read about their business and what they're doing. I also started a position in Zoom. All of those, again, I was able to close. I made some pretty good income over 1,089. Then February started to get a little bit harder. Zoom was assigned to me, but still working with AMD, Mara, Zoom, and 4. And before the assignment, I brought in, let's see, how much is that? Almost 1,400. I think that's 1,380 or 68. And then I paid for the assignment. I paid quite a bit. It was 300 shares of Zoom, which I still own. I like Zoom because it doesn't move around that much, and I can make pretty good income with it. Now it's shot up into the 80s, so it's quite profitable. Then AMD got assigned. Now AMD went down really low. At this point, it was right around 100. So I got assigned 200 shares at 125. Um, Yeah, so it's worked out pretty well. I didn't have as much premium because a lot of assignments. So, and then if I take out the 26,000, so I made what, 724. So right around $1,000 in premium. But of course, I did spend 26,000 for those AMD shares. I still believe AMD is going to be worth 125 by the end of the year. It may be worth even more if it gets momentum. It's going to shoot through the roof, is what my guess is. Then in April was a tough month. I also had Mara get assigned to me, um, 400 shares, which now I'm writing covered calls on. Now, 4, when the market really turned south, I did have to close one position for a loss. So I did take a loss with 4. I took almost a $4,000 loss. Again, with covered calls with Zoom, I just kept rolling them and it worked out pretty well. I won't go into the specific trades. If you're a member, again, I'll upload this when I share this video, probably early next week. If you're a member watching it, let me know. And if you need it sooner, and I'll go ahead and upload it. And then in May, I did no more assignments in May, but I currently own Zoom, I own AMD, and I own Mara. So they've almost all been assigned to me. So I actually have a little bit of extra cash here. So if you look at Zoom with what it's worth, this was in today yesterday. So 24,000, AMD 23,000. It dropped a little bit today. I believe it's right around 118. Mara 4,700. So I am profitable in all those trades. My big hit again was 4, which I wish I could have kept it. But when you trade in an IRA, just realize even though you have a lot of cash, if you're using a lot of spreads, they might not allow you to trade anymore. If your intraday cash value goes to zero, they'll actually make you sell some things. And if something gets near expiration and you have a zero in that intraday trading, um, it'll be closed automatically. I think almost like I believe they almost do it like Robinhood at 2 o'clock. They'll close it for a loss. And I believe that's what happened with 4. And then Mara's, I think it's worth a little bit more. And then the cash, this is what the cash would look like. So the total for the account is 81. So even with the assignments and these one loss, I'm still higher. The account started at 75. It's at 81. And then if you looked at just the cash on a monthly basis, it's almost 2%, 1.83% on a monthly basis, nearly 22%. And again, a lot of it could have been a lot higher if I had just used, I think when I originally did the first 3 months, it was almost a 30 or 40%. um, yearly ROI, but with the assignments and going through April, it definitely came down quite a bit. Rule of 72, even with this, you could double your money in 3.28 years. Rule of 72, just divide your ROI by, or 72 by your ROI, and that's how you come up with 3.28. So it's 72 divided by 21.94, or just shy of 22. Now, if I use this as total return, this is what it looks like. I'm currently at an 8% halfway through the year, which again isn't bad. That's almost like a 16% yearly. Um, Actually, the yearly based on the 7 months is 13.87, or just shy of 14. But my guess is I'll be able to get to some of these kind of returns where I end up having more trades during the same month. That's the other thing I try to do with this versus just doing on a monthly basis. I try to do maybe two trades a month, like with Zoom or one of the other stocks. Um, and then with this return, you're doubling your money about every 5 years. Again, the rule of 72, you divide 72 by this 13.87, and that's almost like you're doubling it every 5 years. Now, all the accounts combined, so you've got 75,000 in this account, 25,000 that brings you to 100 for this monthly wheel trades, and then another 10K wheel trade. Combined, that's 110,000. You combine the income on a monthly basis on average, 2724. And then yearly ROI, it's like 2.48%, which equates to just shy of 30%, which if you're able to do this, and so far I have, even during April with a really rough month to go through when the market dipped so much in April. I believe it started in March. Actually started in February and hit the low in April. But this is like a 2.12 yearly, meaning you could double your account with that kind of a return every 2 years, which can be pretty significant. So, so the return was definitely higher the smaller the account. 2.92 for monthly, almost 6% or almost 3%, depending on how you look at it. And then the spread wheel trade was more like well, that's for all of them combined, was more like 1.83%. So what did I learn from this? 4 loss had a big impact on the ROI. So if I add that back in, this big account would have done much better. This was due to having too many vertical credit spreads in an IRA. So be very careful in your retirement accounts. Just remember, you can't get money in there as easy, and they'll lock them down if they feel like you're taking too much risk. When they locked me down, I still had like 80 or 90,000 in cash. It was a little bit shocking. And Fidelity does it different than Schwab, and Robinhood I think automatically closes you if you can't handle the assignment. But I could handle the assignments, but I did have to sell a few things. It did force me to sell some stocks that hadn't done real well. And then AMD, Mara, and Zoom have not recovered much yet. Actually, they have recovered some, but not to where they were when I first started trading them. Mara, I think, is right around 15. When I started trading it, it was like 19 or 20. AMD, when I started trading it, was like 150. I could see AMD being, I keep saying 125, but by the end of the year, I wouldn't be surprised if it's 150. And then Zoom usually stays between 75 and 80. It may get up to 84, 85, but then it seems to dip back down, and sometimes it'll go as low as 70. But it can be a steady earner. It doesn't move that much. The company is a cash machine. They produce so much cash. So this is what I'm doing. These are probably my 3 favorites. I mean, they're all wheel strategies, slightly different, with a little bit of a twist. I also like to do vertical put credit spreads. Probably that's my go-to trade. Go 45 to 60 days out, do a 15 delta, pick a company that you really like, and typically the strike with that delta going out that distance is like a 10 to 15% off. So it just works out really well for me. identify a stock that's not overvalued, and I'd like to get it 10% cheaper than where it is. So if it's assigned to you, no harm done. You end up owning those shares, and in long term, they typically will perform quite well. So let me know what you guys think. Are you doing something similar? Are you running the wheel? What are your favorite stocks or ETFs to run the wheel? I don't have any ETFs in here currently, but second half of the year, I may jump around a little bit. I may add some ETFs. I've been very successful with ETFs. I've had very few ETFs assigned to me or from me. XLK is the latest, but before that, it's been quite a while. I might have had some SCHD assigned away from me like 3 years ago. So it's definitely a little bit less risky to use ETFs. But let me know, what do you like to trade? I do have some members that like to trade the leveraged funds. I haven't jumped into that. I've been looking at it. I may do a little bit of Thinkorswim once my calendar frees up a little bit. I'm very, very busy these days. So, and as always, leave a comment. I like to respond within usually 2 or 3 days. And I really like um, having people make suggestions or changes, or even if you don't like how I do the videos, let me know. I'll try to make improvements going forward. And as always, thanks for taking the time to watch. And I look forward to seeing you next time.